everybody, this is Peg Maloney from Remax Real Estate Group here in wonderful Omaha, Nebraska. I'm here with Joe Iaccheri with Regent Financial. We're going to talk a little bit about the availability of loans for first-time buyers because you are our biggest group of buyers out there. Joe, what's the favorite form of financing now?
The most commonly used first-time home buyer loan would clearly be the Federal Housing Administration or FHA loan.
Okay, what is required of the buyer? Is it real strict and the criteria?
You know, one of the reasons the FHA loan is oftentimes considered a first-time home buyer loan is because of its leniency in certain areas, such as total debt ratio, credit scores, available reserves. It's a little looser than the conventional counterpart, a little easier to qualify for.
Oh, I see. Now, I understand, I know that they do require private mortgage insurance. In other words, the loan company is protected against loss by the borrower. And they've changed that a little bit over the past few months, haven't they? The amount needed?
As a matter of fact, the mortgage insurance is built into the FHA loan program. Wait, so you don't call it PMI, just mortgage insurance, because it's an insured home loan program.
I see.
That's really the government's involvement with this loan program. It's to insure the money on behalf of the lenders that are lending it. So it works very similar to its PMI or private mortgage insurance counterpart. But you're correct, the FHA did just recently, it was April 18th, increased mortgage insurance costs for all borrowers across the board. So whether it's a 15-year loan, a 30-year loan, it's now unfortunately a little bit more expensive.
Yeah, but still worthwhile.
Most definitely.
Okay.
If you're a borrower that needs that leniency we talked about or doesn't have a sizable down payment, the FHA is still the obvious choice.
I'm hearing a little bit of buzz that maybe that conventional 5% down might be a better alternative to the FHA. What do you think?
Sometimes it can be. Now, with a 5% conventional loan, you really need to be a rock star borrower. You've got to have a very high credit score, good reserves. The bar is raised pretty high for that 5% conventional option. Almost every lender will tell you that that's available. I always add the fact that the PMI companies don't like to insure those loans as readily as they would with a 10% down payment or greater. Oftentimes, a borrower expecting to use 5% down ends up having to go 10 or flip to FHA because the PMI companies have some additional restrictions on what they will insure.
They're considered a little bit more high risk with just the 5% down?
That's correct. Everything is about risk to the lender. The more risk that loan scenario or borrower presents to the lender, the more apprehensive they are about lending that money.
So get your credit cleaned up, be prepared to do a little bit of extra paperwork. Total time is usually taken about 45 days, isn't it, from the time of contract to closing?
You know, the national average is usually around 45 days. Locally, we have several outlets. Won't name any names here, but if I was, they would rhyme with Regent Financial Group.
Really?
But locally, we can get those things done a little bit quicker.
Okay.
30 days or less is not uncommon at all.
Great. Well, if you are thinking about buying a house, and you should be because interest rates are down and the market is just teeming with wonderful homes here in Omaha, just give Joe a call. And what's your number, Joe?
My direct line, 402-884-5613, and you can find us online at regentfinancial.com.
Okay, and of course, if you need to buy a house, Peg Maloney, Remax Real Estate Group, 598-3965. Don't forget that area code, 402. Have a great day.